Hi trader, Lina with you today, and today we'll have a triple strategy, Bollinger Bands plus RSI and trading. Enjoy watching and let's start trading. So we are at the broker, the pocket option platform, and actually let's get down to our trading and analysis of the indicator. The first indicator will have Keltner channel. The Keltner channel is one of the popular trend indicators used by many traders on the forex, futures markets, and so on. It consists of two lines, the upper and the lower borders. So here is our Keltner channel. That's what I was talking about. Why is it similar to Bollinger Bands? Because it has two moving lines, and here is the Keltner line with a period of 20. It shows the price range, and in general we leave everything as it is in the settings of this indicator. Do not change anything for trading on the minute time frame because this is most hittable settings. And how it works, let's highlight the workspace. Let's take a look at this section. Now the volatility is not so big, but I think I can handle it, and you will understand how to enter the tail. In general, here we have the candles, a channel, and how to work with it when our movement goes to the outer part of the channel, that is this area. This is our correction here. A new local minimum has formed, and when it's formed, you need to enter a deal for an increase up deal, because when we have a movement goes to the outer part, that it stops moving, and that is our signal, the first. So we have an exit, we see it, then this is the first signal that the moment will go up. Let's see it there. The downward movement we see here, we see a movement outside the channel, and here we also touched this area, a movement came out. Here we open for an increase. Our traffic has been corrected. Again, we see the exit, and we see the appearance of a green candle, and we again open for an increase. Here we again had an exit to the other part, and then the movement went up. In general, I think the pattern is clear. Here we also had an exit, and the moment went up. We have a downward dynamics of the moment. Let's choose an upward dynamics now and consider. Let's choose this area, choose the workspace. Look, there is an exit. You always should see at local highs and lows we have an exit. We fix it. Here we have an exit, and we understand that the moment will go down. We could enter a trade here and also trade here for a fall. Exit we had again, and we can do the trade down. Here is also our signal, and the price went down. It's also very clearly visible here. Yeah, we see it. Our movement. We see clearly went up, and then an update, and again the movement goes down. So this is not difficult, and even if you're a beginner, so I think it will be hard, but we had oscillators. It is stochastic, let's talk a little about it. The indicator is used to determine the momentum of the price. Momentum always changes its direction before the price changes. It's quite difficult to determine the price direction, but it's possible if you have a design. Here's our stochastic, our oscillator. It has two moving lines. There is an overbought area and there is also an oversold area. It's somewhat similar to the moving RSI. It has a period and there are two moving lines. The blue line is our signal line and the orange line is the stochastic line. So what is the entry to a trade? What is the signal? How to work with it correctly? The entrance to deal it oversold zone. This area is marked 20 or rebound from it from the bottom up. So I think you understand it works about the same as RSI. And what is the entrance to down trade? I think you also understand that this is the crossing of the overbought area from top to bottom. That's when we see that the moving averages cross the area from top to bottom. Then we open a trade for a fall, and in general, this will be signals from the stochastic. So this combination of indicators creates a very cool and competent strategy for trading. And when trading on the 1 minute time frame, we can choose a period of 5. It's not so we see quickly choose the deal, so we see more movements, shows more price movements, yeah, and in our area or another, and this is just our signals. And you can add another stochastic, so leave a period of 14, yeah, you can even set a period of 15, let it be 3 times longer. The main stochastic will be a period of 5, and this stochastic will also show the direction. We will also be guided by it. We will look at the dynamics. It shows us an upward trend we see, unlike the upper one. And on the chart, we see that the trend is dominated by an upward trend. It will not be not useful, so to say. It will be easy to use, so I recommend it. And how to enter a trade using this strategy. Remember, we talked about calendar channel and says that it's hard for beginner to look for entry signals. That's it. How will the trader understand that the movements will not go down further, and our stochastic comes to the rescue because it shows us these local maximum and minimum points. Look here, we're anti-trade for an increase as our stochastic turns around and goes up. That is, we see that the movement goes up from this point, and just like we have an exit to the outer part of the channel. That's a movement leaves the inside, so goes to the outside, and this is the same signal. This we will work on 2 signals. It will be valid 1 signal, and this is the second one. We see that absolutely symmetrical, and so we see the movement. And if we look at this area, then we trade in the minute time frame. We open deals by the minutes. We also have minute candles, the next segment of the moment it goes up. Each candle for a minute. This is 7 minutes. Yeah, 7 minutes. In general, it's worth concluding that it's actually works. We also see the similarity and further moments goes up. Absolutely, also we trade and up on deals with a downward trend. Absolutely. Let's choose a concept palm with the downward movements in general. Let's select this area and see. Yeah, here is our first Gardner signal and our stochastic signal. We see, if you're a beginner, then it's better to first look at the stochastic and wait for its release. Here we have the moment going down. Look, a very interesting moment. Here we have an exit to the outer part of the moment, and here we also get a signal to buy, and also our stochastic goes up, which creates our entry into the deal, our additional signal. And here, if we consider the entry for a fall, then we see our signals again and the moment goes down. In general, a very good pattern of the strategy. You can also focus on the lower stochastic, and we have it with a longer period. It's less sensitive to price, and in general, you also see the exit of this stochastic at the same time at this one. Then this is our 100% win-win signal. And you need to enter the deal immediately. This is the principle of this strategy, and in general I think we can consolidate the theory with practice and open 2 or 3 deals to consolidate the result. Actually, $1,000 on the balance deals in the minute time frame. We'll leave the settings for these indicators, the overbought and oversold area at 80 and 20, and let's get started and choose our first entry. Here we'll open the deal for an increase. Now I'll explain why. Here we see the exit from this point, the moment of yes, it should go up. Since we see the intersection and exit from the oversold area on the stochastic, we choose this area, and from this area we see the exit. And also, if you pay attention, our lower stochastic also shows a reversal, and this is also our signal, and it complements our 2 signals. And in general, we are forming a good low parts, and further moment should go up, I'm sure. However, you can see that the first trade closed in positive. We see, deal in plus. The moment went up, the signal was completely accurate, therefore the deal was opened in plus. And let's continue. Try to open a deal for a fall. So look, let's open an up trade here. I didn't find a down trade. Let's open up here. Here we just see again our stochastic exit, and here we see an exit in the outer part of the channel, and from this point, from our second signal, we will open up deal. So according to the downward dynamics, we will win back the correction. Let's see. Second trade closes positively. Again, the signal was completely good, even through we entered to trade at the wrong level, but it will be desirable to enter. And you see the exit is very good, and if we had come in later, our deal would have closed in plus anyway. And this is a feature of the minute time frame, that's if you can work correctly with indicators, then this will be enough for you. That's why this strategy is very good. And let's open one more deal. I try to find a pool in order to clearly show you, and let's continue. So look, we are going into deal just the same for a fall. We see next to the outer part of the channel. Let's better highlight it. In general, how to understand when a correction will take place in our, when there will be movement down, we have exited. We see the signal. Stochastic will help us. We see intersections and the overbought area, and based on this we opened a deal for fall. We see similarities. Here we have an intersection and then we open a down trade. You see what happens to the candles in the last seconds, and our trade in plus. So with $1,000 for 3 deals, we made 2,500. Let's withdraw it. 3,000, yeah. Let's leave $100. So I'll touch a screenshot. You can see the results of the trading session on your screen, and we get a great results. So even with a small budget, you can do it. And don't forget to go to the description, the links below, and bye bye.